Greetings, class. Welcome to our 9th edition for entrepreneurship lesson. I am going to be your presenter, Dr. Yatich. And today's lesson, I have decided to break it into 5 discussion points. These discussion points will guide us in the process of going through the financial planning for entrepreneurship. And in doing so, allow me to go through the 5 key areas that we're going to discuss for our lesson today. The first aspect of our discussion today is to look at the definition of business financial planning for entrepreneurs. The second discussion point will be the justification for entrepreneurship financial planning. The third point will be looking at the importance of financial planning for entrepreneurs. And the fourth discussion point for our lesson today is to look at the basic financial planning processes. I have also decided to introduce for you a discussion point for further reading, which will form our next, which will be discussed in our next lesson. So to start us off, the first thing that we need to ask ourselves is, what is financial planning and why is it necessary for entrepreneurs? To answer that question, the first thing that we need to ask ourselves is, who are these entrepreneurs? Most often than not, entrepreneurs go into business like any other business person. But what is this distinctive characteristics that defines them or separates them from any other ordinary business person? And this tells us that entrepreneurs are these different people or different category of people in terms of what they look for or what they try to identify as a business idea so that they can be able to fulfill a particular need in the society. Many often than not, business people go into business for the sake of making money. But for entrepreneurs, it is always, they always have this innate characteristic, which is they either wanted to maybe change, maybe come up with a different product in the economy or in the society, or to take advantage of a particular need in the society. The other aspect of entrepreneurs that differentiates them from any other business person is the ability to always have high tolerance for risk, which is not a characteristic in any other ordinary business people. So in answering the question of why financial planning, or what is this planning that, why financial planning for entrepreneurs, is for us to consider, for example, the definition given by Agrawal, that financial planning simply is the process of determining your business cash flow and how you're going to spend it for the business. And so, for an entrepreneur to run a successful business, it is important that financial planning forms part and parcel of the process. Many a times, we ask ourselves, is this the only reason, or is this one of the reasons that make, or maybe informs entrepreneurs to go into business? But that is not the case, because there are many other reasons that entrepreneurs go into business as a reason. But then it is important to consider that every entrepreneurship venture or startup requires a financial aspect, or it requires money. And this money has to be spent either in buying raw materials, paying for staff, maybe, and further investments. The second definition of a financial plan is that in our previous lesson, we did look at the business plan. And in a business plan, we found that financial plan is a component of the business plan, which normally is embedded in the business plan at the end of the business plan. So the financial plan helps the business to project cash flows and also to determine how they're going to spend the money that they're going to receive. If you go into business as an entrepreneur and nobody is going to buy or purchase your product, then there is no need for you to go into that business. But since people are going to purchase your product, which is a good thing, then it is important that you plan for those money. And that is why you need to project, you need to focus, you need to have a schedule of how you're going to run your business from the point of inception and all the way up to the point where you either divest or you either maybe increase the number of business franchises that you have and so forth. So it is important to know that business planning is a key component, or financial planning is a key component for entrepreneurs, because it helps them to mitigate any other financial challenge that may arise in the course of running their venture successfully. The next thing that I want us to look at today is why financial planning for entrepreneurs. And allow me to present to you one of the empirical evidence that was done by other researchers, and they confirm that actually one of the reasons why many entrepreneurship fail in their 5-year period of startup is because of lack of financial planning. Small Business Administration, which is an organization, a conglomerate of researchers, did a study in 2019, and they confirmed that there are about 7 reasons that makes entrepreneurship not to succeed. And one of the key reasons that actually was pinpointed by this group of researchers is the lack of financial planning by entrepreneurs. So it is important to note that borrowing from that empirical evidence, that today we are discussing the need for financial planning by entrepreneurs. Most of the successful entrepreneurs, like for example, Jack Ma of Alibaba, talk of, for example, Jeff Bezos of Amazon, talk of, for example, Richard Branson of the Virgin Group of Companies, you will actually notice a particular pattern or a distinctive pattern of behavior in the lifespan of their businesses. And one of the key issues that most of these people have always never failed to focus on is the aspect of financial planning. So for entrepreneurship to succeed, it is important that we always consider financial planning as one of the key components, because it helps the business to be able to project, to focus, so that they can be able to attain their goals and at the end of the day also achieve their objectives. I've also indicated there, as mentioned earlier, that one of the distinct characteristics of entrepreneurs is the high tolerance for risk, which differentiates them from any other business people, and also the concept of thinking outside the box. And that is why for many entrepreneurs, most often, many of their business are not likely to be run down or to collapse. Even though statistics tells us that most of these businesses succumb to their death within the first 5 years. But most of the successful entrepreneurs, if you were to go and interview them and maybe get to know how they were able to succeed, then they will actually tell you that financial planning is one of the most important components. We know of small and micro medium enterprises, which forms a chunk or a big chunk of entrepreneurs in a local economy. But most of the time is that the focus of SMEs is only the local level. But we have the innovative-driven entrepreneurs who also look at the global perspective. And most of those SMEs are the ones who are likely to collapse. Because most often than not is that they depend on less maybe small sources of finances, or they have less amount of finances that can finance the business. And because most of them also sometimes maybe lack this aspect of financial planning, is what is contributing to their failure. And that is why it is good to note that for any successful entrepreneurship to run, a good financial plan should be put in place. The third component of our discussion today is to look at why financial planning. And in this case, we are simply looking at the importance of financial planning. Remember that for any entrepreneurship venture to succeed, you start a business, you have an idea as an entrepreneur, then you start the business, then in the course of running the business, many other variables come into play. Competition comes in, there is always the introduction of substitute products, there is competitiveness that is very intense, and so how do you survive in such a very, very, very dynamic environment? You can only survive by always going back and looking at your financial plan so that you can be able to adjust appropriately. And in the process of adjusting, you're able to mitigate any other event or any other action that might maybe, for example, tend to interrupt the successfulness of your business or the running of the day-to-day business of the startup. So in this case, why are we focusing on financial planning for entrepreneurs? The first point, or the first reason why entrepreneurship financial planning is important, is it helps the company or the firm to address the feasibility of the company. When we talk about feasibility of a company, we are looking at the practicability of that business. You cannot, for example, project, or you cannot have a business idea, and in this business idea, you project, for example, that maybe you need large amount of capital in terms of money. Take, for example, you want to start a small salon, and you project, for example, an investment need or an investment in terms of capital of maybe, for example, more than $1 million. And maybe One of the sources of your of the finances that you want to use to run that business could be basically maybe your savings. So in such a case, financial planning enables you to consider or maybe to look at other options, whether you're going for a bank loan, whether you're going for angel investors, whether you're going to apply for a grant, and so many other things, so that you can be able to meet the deficit in terms of what you have vis-a-vis what the business requires. And so it helps you to consider visibility, so that if you find that the project requires $1 million, for example, and you have 500,000 Kenya shillings, then it means you may need to scale down some operations or some activities until you have a workable budget. And that brings you now the element of practicability for your business. The second reason why entrepreneurship is important is also that it helps you to plan for business finance. Business finance here simply means how much money do you need at the point of starting the business, and when is it needed, and is it for a short period of time or for a long period of time? So we have so many diverse sources of business finances. You can get a bank loan, you can use your savings, you can get angel investors, as I mentioned. And so a good workable financial plan or a sound financial plan enables you to predict or enables you to identify those sources of finances. And once you do that, then you are likely to run your business successfully. The third reason why business financial planning for entrepreneurs is important is also that it helps you to seek for additional funds. And I think, as I've mentioned, there are so many other sources of funds that are always available to an entrepreneur. Remember, in our business plan, in our previous lesson, we did discuss that many often than not is you do, or as you write your business plan, creditors and lenders, or people who would want to lend money to your business or to partner with you, would want to have a read of your business plan. And one of the interesting aspects of the business plan that always these lenders want to look at is obviously the financial plan. So as you do your financial plan, ensure that this plan is going to attract the eye of the lender or the eye of the investor. Because if they see a well-thought financial plan, then they are likely to advance you some money, or they are likely to partner with you. And that will also help you to do some projections and an assumptions of how the business is likely to run within a short, in the long run or in the short term. The fourth reason why financial planning is also important for entrepreneurs is that it enables the business to continuously monitor the performance of the business. We are told that entrepreneurs go into the business, but they are not sure whether they are going to succeed. But they always bank on the preparation and what type of resources they have that they believe is going to actually run the business successful, or is going to help the business to successfully run. Remember, within any business environment, we have so many factors at play. We have the external factors, we have the internal factors. For the external factors, it is good to know that it is always beyond the purview of the business. So for business to exercise control over the external environment, then it means you have to continuously assess your business with regard to competition, with regard to government policies, with regard to even global happenings and events, because they're likely to impact the business in one way or another. And for example, many of the times we have some wars, for example, in some of the countries that give us oil. Then you find that this tends to affect the pricing of fuel products. So as a business, it will impact on the cost of transportation for your business. And so it is important that you continuously scan the environment so that you can identify those challenges that are likely to affect the business. And when you do that, then you are able actually to run a successful business, because it will enable you to continuously monitor the performance of your business. The last point of our discussion today is for us to look at the process of financial planning. So in doing that, we have looked at the definition as to why and what is financial planning for entrepreneurs. We've looked at the importance of this process and why it is important for entrepreneurs. Now, I want us to look at the process of going through. And allow me to say that this is not cast on stone in terms of whether it is the process that all entrepreneurs are supposed to look at or to focus on, but we are only giving a fundamental or a basic standardized process. So I've laid down 6 steps that entrepreneurs can use so that they can be able to look at, or maybe they can be able to have a good financial plan by following those 6 steps. Having given you the definition of what financial planning, then we are looking at, for example, 1, for entrepreneurs to succeed, then we are told that this process must be deliberate. And I want to underline the word deliberate, because if you want to succeed in any business, then it must be informed. So it must be a deliberate process. It must be an organized process whereby you even involve experts who can enable you to go through and let's say, for example, you can go through your business plan, your financial plan, then they can advise you on whether you need some adjustment here and there or you need some improvement. And then again, we are also told that in planning for finances, entrepreneurs have to consider the following. And that now takes me to the 6 steps. So number 1 is that you need to consider the current financial position of your business. I started by saying that when you start a business as an entrepreneur, you are able to assess yourself in terms of the cash that you have at hand, the assets that you have that you want to put into that business, and all those components of the factors of production. And when you have those factors, most often than not, is that it's always good to know that some of those resources are limiting. So, and if they are limiting, then it is important for you to assess what do you have and what do you intend to borrow so that you can be able to run a successful enterprise. So the first step for you to consider in this financial planning process is to consider the current position of the business in terms of finances, in terms of resources, and so forth. Once you do that, then we go to the second step, which is to determine the financial goals. So what are your goals? And when you talk about financial goals here, what you are looking at here is how is your business likely to be in the next maybe 3 months, 6 months, 1 year, and 2 years, for example. When you do that, then you are able to assess, for example, how is the business going to give you some cash flows. From those cash flows, you are able now to do an expenditure. And from the expenses, you are able now to predict at what point are you going to break even, at what point are you going to make profit, and so forth. So the first point is that consider, first of all, the current financial position. Then the second point is that you look at the financial goals of the business. The third step is also for you to look at is how now are you going to pick on from there. And this is what we call identifying the alternative courses of action. You have assessed the current position of the business. You have considered the goals of the business in terms of finances. And then now, for you to proceed from there, then we are saying you need to look at the alternative courses of action. And these courses of action here simply means that there are always alternative options for a business to pursue in terms of financial sources, in terms of assets, and so forth. And so as you do that, then we all need to know that for any business to survive, then it is important to consider that maybe in the next 1 year, in the next 2 years, in the next 3 years, what am I going to do? And as you do that, then it simply means that you need to know which action is favorable for your business in terms of cost, in terms of time. The fourth step that you also need to consider is once you've identified these alternative actions that you want to take. Maybe, for example, you are torn between going for a financial loan, borrowing from friends, then you need to evaluate the risk of that action. So every action in business has a risk. And when you talk about the risk, it is good to know that entrepreneurs have this high tolerance for risk. There are people who do not fear risk. They always want to take another risk, another risk, another risk. And that is why, if you read the story or if you go through the story of somebody like Richard Branson, you'll actually find that he started from a school magazine, went into the music recording business. Up to now, he's running the Virgin Atlantic group of companies, including the Virgin Air. And in doing that, we are simply saying that it is important that when you have your options at play, then it is important that you evaluate the risk of each and every one of them, so that as you go along to invest, or as you go along to run the business, then you will have considered which one is more viable for the business. The second last point for this process is to develop now an action plan. So you have identified different courses of actions, you have evaluated, and you are saying now you've decided you're going for a bank loan. So when you go for a bank loan, then you need to come up now with an action plan. How much money do you need from the bank for the next 6 months? How much money do you need from the bank in the next 1 year? At what point are you going to refund this money to the bank? And that is why now you need to go to the bank, then have an agreement with the bank in terms of at what point am I supposed to pay? Is it when the business has started recouping profits, or I can start paying immediately, even when the business has not started making profit? Those are some of the agreements now that will form this step number 5, which is developing an action plan. The last step that I want to discuss with you today is monitoring and evaluation of the plan. So as you continue writing your business plan, it is important to know that once you are through with the writing of the business plan, you cannot say now that you're through with the business plan and I must follow this plan strictly. It is important to know that every now and then there are so many things that are going to happen within the environment, and that those are what we call the uncertainties and the dynamic changes within the business environment. And if that happens, it is important for you to revise the plan. Take, for example, some time back, the Central Bank of Kenya has indicated that they are going to put a ceiling on the loan rate or the bank rate. And after some time, through Parliament again, that directive was rescinded by the Central Bank of Kenya. What does that mean for a business? It means you have to be always open to changes and challenges in the environment if you want to run a successful business. So there is nothing static in business, or there is no static decision that we can say you will follow this decision up to the very end. It is important that for a successful business, you always have to consider, for example, consumption patterns. You need to look at, for example, change of tax regime. You need to look at, for example, environmental requirements. And all those inform the successfulness of your business. So, class, what I can say so that they can wrap up the lesson is that those are some of the 6 steps that you need to consider when you are doing your financial plan. Lastly, as I mentioned earlier, is that our next discussion, which will be our 9th lesson, part B, is to look at the tools that entrepreneurs, or that at the expense of the entrepreneurs, that can be used to assess the viability of the financial plan and the successfulness of the business. So just to mention them is that one of the tools that I want you to go and read about so that it can form our next discussion topic is that one of the key tools that is normally used by entrepreneurs and even other business people to assess the viability of their business is what we call the income statement. And what is an income statement? As a prelude to our next discussion is that income statement simply examines the profit and loss of the company. The second tool is what we call the cash flow forecast. What is this cash flow forecast? We are tuned to, or we have come across some of these financial statements like the trial and loss balance. So some of those tools or some of those statements enables the business to project funds coming into the business and out of the business. And that's why you have, for example, the trial balance. And then the last tool that I want you to look at is the balance sheet. And the balance sheet will always keep on informing your business of the assets of the company, the liabilities, and the capital. And if you do that, then in our next lesson, when we come and discuss this, then it will actually make our discussion easier. So allow me to appreciate you for listening into this lesson and state that I've been your presenter, Dr. Yatij. Thank you.
These televised lectures supplement our robust online learning going on our MKU online platform. You can view more on our televised lectures via our online platform. We are in a digital era, and Mount Kenya University knows this. The following are the steps to follow so as to complete your online application. Download the application form from the website www.mku.ac.ke. Attach copies of your academic certificates and ID. Pay the application fees via M-Pesa pay bill number 270988. Your ID is the account number. 2,000 shillings is the charge for a postgraduate. You can also deposit in the bank accounts provided on the website. Then email all the above to apply@mku.ac.ke.